So a lot of people ask me, why do the littlest loans cost the most? It's just a little tiny loan. Why is it such a higher interest rate? There's more points associated with it. Well, I figured that'd be a great topic to talk about today. Today is the 25th of April, another month, man, getting really, really close to the end, another Friday. And so why is that? So right now we got our DSCR product, phenomenal product, right? 150,000 above, amazing rates. I don't think you can really beat it. Getting a loan to your LLC as a real estate investor, fixed for 30 years for rates very similar to conventional. Why would you do anything different, right? But then you get below 150,000, you get below 100,000, man, they hit you with the points. It's expensive. Why is that? Because it's a little tiny loan. These guys who are funding this is not government capital. It wasn't the Fed throwing money into the mortgage-backed securities like what happened over the years. This is private capital coming from private label securities, lending you this money, which is the majority of the capital to buy the asset that you get to own, that somebody else pays for, and you get to get 20, 30% gain on your investment every year. That's not what the people lending get. They get the interest rate you charge them, 7+%, maybe 8, maybe 6. It's probably in the mid sevens right now, maybe over 8, depending on your credit score, the loan size, all these things. You're like, that's so expensive. Is it? Because they're only getting, say, actually getting less than that. They're charging you, say, 7.5%. They may be only making 5.5x. They got to pay all this administrative costs. They're not making much off of you. And then you go in there and you take a little loan amount, say $120,000 versus say a $200,000 loan. Well, if they're trying to deploy $100 million, but everybody takes it in $100,000 increments, and they got to pay all these fees and administrative costs, and they've got to pay servicing fees and securitization fees and audits. It gets extremely expensive. That $100 million on deployment, $100,000 increments is extremely costly to them. But if they can do it at $200,000 and $300,000 increments, the costs go down a lot for them. So if you're going to buy houses that's going to be loan amounts below 150,000, just know there's going to be some more cost to it. And it doesn't matter. You're making it all back. You're making 20, 30% on your money. If you don't understand that, call me and I'll help you. We'll do the math. And sometimes you're making more than that. I see people making incalculable returns because of how little they have tied up in the deal. So if you want to understand it, let's talk. Now let's talk about the market, what's going on here. Interesting how it's following pattern. It's following pattern here, guys. Look at this. So we had seen where we had the big sell-off from what happened with stocks, and now there's a little bit, everything's coming back. Stocks are taking off, right? Stocks have been getting some good moves these last couple of days. Look, so is bonds. The exact opposite things happening what the market is saying it should do. When stocks go up, bonds should go down, right? When bonds go down, or when stocks go down, bonds should go up. But they've been going in tandem. Very opposite of what's been happening because there's a little bit more faith in what's happening in the economy and the markets with what's going on geopolitically. But look where it's staying. It's staying in this channel. Interestingly enough, let's zoom in a little bit more on that so you guys can see it. It's staying right within the channel that we had talked about. So it's staying, but it broke up to these levels that were going to be our ceiling, came right back down, swung a little bit broader than where it went into the up part, and then came back into the channel. Now it's playing in the channel. We'll see if it gets some steam out of it and starts to break out of it again. But that's where we are. We're following the channel, following the price action there. But understand those things when it comes to your lower loan sizes. More cost is not a big deal. It's a percentage of a small amount. So don't get all caught up about that kind of stuff. Just buy good properties that are going to create good opportunity for you. Don't worry about what's happening with these things. Don't worry about what's happening with the rates. Get what you can while you can. Control what you can for as long as you can. That's 30 years fixed. Appreciate you guys.